All right, welcome back, everyone, for another deep dive. We got to talk about the big guy, right? Trump. Back in the White House. And what does that mean for crypto?
Big question.
Yeah, some people think, it's going to be a boom.
Right.
Others think it might be a crash. You buy the rumor, sell the news, that whole thing. And one of the people saying it might be a crash, a pretty big name, actually. Arthur Hayes,
Yeah.
former CEO of BitMEX, knows a thing or two about crypto. He's actually calling for get this, a harrowing dump
Wow.
around the inauguration.
So what's his thinking there?
Yeah, I mean, why? Why the dump?
Well, Hayes argues that everyone is expecting, immediate policy changes from Trump, right? Specifically around crypto. But the reality is that enacting those changes, it takes time. Government doesn't move that fast. And that gap between the expectation and the reality, that's what he thinks could trigger a sell-off.
Right. Everyone's expecting Trump to just flip a switch and boom,
Yeah.
we're all in crypto utopia.
Exactly.
But it's just not that simple.
Not that.
So we could see like a classic kind of buy the rumor, sell the news situation.
Yeah, definitely a possibility. We've seen it happen before in the crypto market. And Hayes thinks this time, it won't be different. The market's already pricing in a lot of positive outcomes that might not actually materialize as quickly as people are hoping for.
Okay, so dump. Makes sense, I guess, in the short term. But then he goes on to predict this crack-up boom phase following that initial crash. What is that?
Oh, that's where things get really interesting. So this crack-up boom is like the final euphoric phase of a market cycle where prices are just skyrocketing because of, I guess, speculation and a loss of confidence in traditional assets, kind of like the last hurrah, before a major correction.
Okay, so he's saying this Trump-induced crash might actually set the stage for like an even bigger bull run later on.
That's the implication. Yeah, it's a fascinating perspective. Market cycles are a natural part of finance. And
Right.
crypto, for all its innovation, it's not immune to these patterns.
Right. It's still a market.
It's still a market.
Okay, so let's talk about what's driving this current crypto surge. I mean, Trump's been pretty vocal about his, pro-crypto views, talking about making the U.S. a crypto haven, even like a national Bitcoin reserve. Is that what's fueling this rally?
It's definitely playing a role. Trump's a master of branding and marketing, let's be honest. And his pro-crypto rhetoric, it definitely has an impact on market sentiment. And sentiment is a big factor in price action, especially in a bull market, which, we are in right now.
Okay, but how much of it is just hype? Like, what are the actual chances of these grand plans actually, becoming a reality?
That is the million-dollar question, right? Even if Trump really pushes for, pro-crypto legislation, there's no guarantee it will pass quickly or in a form that actually fully satisfies, the crypto community.
Right.
So it's important to balance that optimism with a dose of realism.
Okay, yeah, don't get ahead of ourselves. But I mean, there are analysts out there who are really bullish on Trump's return. I mean, like Matrixport, for example. They're predicting a strong start for Bitcoin in 2025.
Yeah, they are. And it's a valid perspective. Their argument is that, Trump's policies, they will attract investment, drive adoption, and ultimately push prices higher.
Okay, so who do we believe? We've got Hayes predicting a crash, and then you've got analysts like Matrixport forecasting a boom. Like, who's right?
That's the challenge, right? There's no crystal ball in crypto. That's why it's important to, look at the market structure.
Right.
And for that, the charts are really key.
Charts never lie.
Charts never lie.
They show us the actual price action, the real supply and demand dynamics that are happening.
Right, exactly. It's not just about the charts themselves.
Yeah.
But understanding the context, right? Like, what are the major support and resistance levels? What are the historical patterns? Are there any signs of weakness or strength in the market? These are all things that can help us navigate these volatile times.
And it's worth remembering, Hayes isn't the only one who's hinting at a potential correction. There are rumors about MicroStrategy, the big Bitcoin holder, that they might be entering a blackout period in January.
Oh, yeah.
Which could, temporarily halt their buying activity.
Right. If they pull back, even for a short time, it could have a ripple effect, especially if it coincides with, other factors like profit taking and the general uncertainty around the inauguration.
So are you saying people should be selling their crypto?
Not necessarily. It's all about managing risk, right? Making decisions that align with your individual goals and time horizon.
Right. And this is a good time to remind our listeners that we are not financial advisors. This is not financial advice. Always do your own research and invest responsibly.
Absolutely. The crypto market is incredibly dynamic and things can change quickly. Staying informed is crucial.
Okay, so we've covered a lot about Hayes' prediction, market cycles, some strategies to consider,
Yeah.
and it's clear that the crypto market is, like, on edge,
Where?
waiting to see what happens with Trump's return.
Definitely.
We've got the bulls who think it's going to be massive, this huge boom, and the bears, like Arthur Hayes, who are predicting a correction, even a crash.
It really highlights the importance of, understanding the market. And that's where, we talked about charts being important.
Yeah, charts. I
Charts.
mean, they give us that visual representation of all the activity, right?
Exactly. They can help us see those patterns, the trends, those crucial support and resistance levels. It's like reading the market's fingerprint.
So even with all the, like, fancy algorithms and trading bots out there, you're saying those, like, basic principles of technical analysis still hold true.
Oh, absolutely. Those candlestick patterns, moving averages, trend lines, those are timeless tools that give you a way to analyze, market psychology, which is, let's face it, a huge part of crypto.
Yeah, fear and greed, all that good stuff.
Fear and greed, exactly.
But I imagine it takes experience to really, like, understand what the charts are saying, right?
It does. It's a blend of art and science. You have the technical indicators giving you that objective data, but you need that intuition, to interpret those signals within the broader market context.
So it's not just about, like, blindly following signals.
Not at all. No indicator guarantees success. It's about combining that technical analysis with fundamental analysis. Looking at the underlying technology, the team, the project's potential, all of that matters.
And this is especially important when we're talking about, like, a potentially volatile event, right? Like Trump's inauguration.
Precisely. If we take Hayes' predictions seriously, which, given his track record, we should at least consider, what does that mean for someone listening right now?
Yeah, good question. I guess the first question is, like, how do you protect yourself if there is a crash?
Risk management is paramount, Diversification, for one. Don't put all your eggs in one basket. Set stop-loss orders to limit potential losses. And, this is key, never invest more than you can afford to lose.
Solid advice. Don't get caught up in the hype and risk, your financial well-being. But, okay, let's say someone does believe Hayes' prediction. Are there any, like, specific strategies they could use?
There are a few options. One is to, reduce exposure in the short term. If you're really worried about a dip, consider selling some holdings before the inauguration and potentially buying back in at a lower price.
It's a classic buy the dip strategy.
Exactly. But remember, timing the market is notoriously difficult. It takes skill and a strong understanding of your own risk tolerance. Another option is hedging. You can use derivatives like futures or options to potentially offset losses if the market declines.
Now, for those who might not be familiar, could you explain what hedging actually means?
Sure, hedging is essentially creating a position. That benefits if the market moves against your primary position. So, for example, if you're holding Bitcoin and you think the price might drop, you could enter a short position in Bitcoin futures. If the price does fall, the profit from your short position could offset the loss in your Bitcoin holdings.
Okay, that makes sense. So it's a way to kind of, like, manage that risk. But it sounds like it requires a certain level of, like, expertise.
It does. Derivatives can be complex instruments. It's crucial to understand how they work before using them. And of course, there's always the option to just hold and ride out any volatility.
That's a strategy in itself, right?
Absolutely. It might be suitable for long-term investors who believe in the fundamental value of their crypto assets and are willing to weather those short-term fluctuations.
So no matter what your strategy is, it sounds like staying informed is, like, crucial.
Without a doubt. Read articles, listen to podcasts like this one, engage with the crypto community. There's a wealth of information out there.
And speaking of information, it's important to remember that everything we discuss here is for educational purposes only.
Right. We are not financial advisors. Always do your own research, consult with a qualified financial professional if needed, and make decisions that are right for you.
Okay, so we've covered a lot about Hayes' prediction. Market cycles, some strategies to consider.
Yeah.
And it's clear that the crypto market is, like, on edge.
Waiting to see what happens with Trump's return.
We've got the bulls who think it's going to be massive, this huge boom, and the bears, like Arthur Hayes, who are predicting a correction, even a crash.
Yeah, it really just shows you how unpredictable the crypto market is, right?
Yeah, I mean, there's so much going on. Politics, technology, regulations, and then you throw in all the speculation on top of that. It's a lot to keep track of.
It is, and that's what makes it so exciting, really. But that excitement, it needs to be balanced with a bit of caution. Don't get swept up in the hype. Whether it's, bullish or bearish, do your own research, understand the risks, and make decisions that align with your financial goals.
Yeah, for sure, because, even the most experienced analysts, they get it wrong sometimes. Predictions are just predictions, right? They can spark some interesting discussions, get people thinking, but they're not guarantees. No one has a crystal ball.
Exactly. And that brings me to Arthur Hayes, His writing style, he's known for being pretty blunt, even irreverent at times. He's clearly brilliant, but he doesn't take himself too seriously.
Yeah, I know what you mean. He's got that, way of cutting through the noise. Like, for example, in this blog post, he talks about how the crypto market is like a casino on fire.
Yes, that's a perfect example. It's a provocative statement, sure, but it also captures that chaotic and unpredictable nature of the space. He's not afraid to challenge the conventional wisdom.
Yeah, and I think that's a good reminder for all of us, right? In crypto, as in life, a little humility goes a long way.
Couldn't agree more. So as we wrap up this deep dive, I want to leave you with this thought. Whether you're a seasoned trader or just starting out, stay curious, stay informed, and never stop learning.
Because in crypto, the only constant is change, right? And that's what makes it so fascinating. Until next time, everyone, happy trading.